following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Here's the picture of the U.S. dollar index, the June contract. Here we go. Let's get right into it. We got down into that weekly unfair high. We talked about at 96, I think it was 45. Reached a low yesterday of 96.31.32. We talked about that pre-market. And let's just go into the weekly chart here. And this is on a kind of a true pictorial scale. It looks like it dipped a little bit farther than it did, actually, but I'm just going to point out the low yesterday, 96.31, and that unfair high with a little noise factored in was 96.47. Excuse me, I thought it was 96.46, but we talked about, the good news possibly picking a battle, waiting patiently until we got down there. That happened, and lo and behold, we've rallied about from trough to peak, reached a high today of 98.21. So, decent rally off of those weekly unfair highs. But what do you do now? We had the new profile appear. We got the possibility now with this 96.42 down below on a new daily profile that's appeared for to kind of stay in a range and rattle around here a little bit. That's what I think probably will happen. So now you've got some major inflection points to pay attention to on the dollar, namely 98.07 down into 96.42.47. So that's going to be the kind of the sell the top and buy the bottom situation for a while in the U.S. dollar, and there's not a lot of leverage in between there. So that's the take on the U.S. dollar. Okay. Now, what does that generally affect? It generally affects, obviously, the 6 components that comprise the U.S. dollar. The euro, got a new profile in the euro. This is kind of why we're spinning right into this morning. U.S. dollar got that bounce. Obviously, this is an inverse relationship for the most part. Unfair lows, again, we talked about the support area being 107.46 on the U.S. dollar and the daily unfair highs, but you got a little bit of a DMZ there, a new profile that's appeared today based on that action yesterday. And this was not remotely looking orange yesterday during the morning show that we did. But during the day, you started seeing the scale out situations here at a reverse on the euro. If you were watching this during the day and you were watching the scanner, we can pull up the EUR USD. We've got the new weekly situation appearing there. This is the daily. I'm going to go into the weekly, and the scanner's a little bit ahead of time on some of these charts too. It usually indicates a little bit ahead of time. So you got a new weekly bar possibly trying to appear there. By way of the scanner, and you've also got a little bit of a support situation, a DMZ down here, 107.02 up into 107.46. So when the dollar started getting off that 96.47 area, you started seeing the yellow bar appear on the euro, which is that somewhat inverse relationship. And then, as we closed with the yellow bar and the telling you that the scale out situation is probably before you, we had that profile appear and lock in after yesterday's close, and those are the levels, if you will, to pay attention to on the euro based on that alone. All right, we're going to opt out on the yen. The yen's just kind of hanging in there, similar situation as we've been talking about. Let's get right into the S&Ps. We're going to try to devote the last part of the show today to individual stocks and stock plays within the volatility that's happened in the last week. And there's some great opportunities in the trading scene on individual stocks right now. So we're going to get back into that. We talked yesterday, again, the S&Ps 2038, a little bit of a noise factor, got down below there and got back above. What do you do with this now? The Brett situation, long-term still positive. That may roll over Monday morning. Today's Friday, but we had a lot of these speed dials, if you will, start. The 240 started crossing over I want to say Tuesday. The dailies crossed over intraday Wednesday. I want to say that. And, you know, that was kind of telling you to opt out on some long situations for a while. But, you know, we got down to some major inflection points on the daily, and we can't ignore those. So, you know, they provide a little bit of a trading opportunity. These speed dials aren't really reversing right now, so we're looking a little heavy here on the index itself. Okay, here's the NASDAQ. This has kind of been the darling of the long world, and what a what a pullback this thing has had. We talked about this 43.89 area being somewhat support. If it's going to be holding, continuing to look at the breadth, obviously as a guiding light for this. And during the day, now the NASDAQ has really folded over. And we're not really wanting to stay off these lows here. And considering that the internals of the S&P and the NASDAQ in a non-weighted fashion are still glaringly negative, except for that long-term weekly, these support areas may not hold. But as we look at these weeklies, they are a little bit of a smoothing action that's a little bit greater than the lower term time frames. I don't like the way this thing's just kind of hovering around and collecting itself down here and not wanting to ramp back up large yet. So these are, you want to see things get away from major inflection points, and this seemingly is not happening with the S&Ps and the NASDAQ right now, which means that we could have some technical damage on both of these indices, and if that happens, it'll be, again, a lot of washout situations, and we could head much lower, namely down into 4170 on the NASDAQ and on the S&Ps. And I'm just kind of calling some numbers here. Let me pull up the weekly here. Definitely down into 1981.70. I don't know if it's the time to step in and try to start buying these particular indices right now. I think you just got to sit tight and see what's going to happen around these major inflection points. Put it that way. We got to look at the DAX as it's related to the euro and a couple other things going on in the European Union. The euro's pulling off. This is obviously that default relationship to some degree. 11,750, putting stops below there. Again, I got stopped out of this. I was trying to buy the bounce on the DAX for a while, and was too much of a chicken to get back into it. But we're back in the fair auction, and looking back in time, this is consolidating more than likely in a larger sense, especially with the euro seemingly with the possibility of it heading lower to move higher. Okay. Let's take a look at gold really quick, just to cover some of the usual suspects. Talked about this 1200 number being very, very important. We're sitting at 1200 right now. We obviously shot through it, compressed up against that area and shot through it. I wasn't looking for this to trade much higher, but we went up to 1220 and I missed that. But caught some really good moves above 1170.72. But what do you do now? Well, now we're coming back into 1200. Still don't have any major inflection points to coincide with that 1200 number. We do have an orange bar appearing on our weekly here, and that will, if it stays orange by the end of the day, and it looks like it might, we will have some more inflection points. I don't know if you can get some huge leverage right now trading gold one way or the other. So again, I think you just kind of stay away from this until you're provided some new information. Looking at the notes, this is what I love to see. All right, we got a little bit of a pullback. We got the new profile, and we're sitting right there at the inflection point. And I'm looking at this, guys, at a buy situation. And that 128.11.12 area, I got to put stops down below and just kind of, hopefully we could shoot back up to 129.06. I like this. I like this new profile appearing, and I like it from the long side. We kind of satisfied almost fully coming back into that unfair high yesterday retest. And I like this. I like this situation on the 10-year. Here's the 30-year. Similar situation. ZBM5, new profile. Stops oriented below 162.20. We got to hit silver really quick. Talked about the targets above before around 1722. That's obviously been hit. We're just sitting right there. I don't see a lot of major leverage here to deal with silver or gold right now. So I'm just, if you've been long and made some points, you got a weekly up for high, you're dealing with 1722. Might want to scale out of some of it. Another usual suspect. Let's take a look at crude May contract. Here's the situation here. 50.81 pre-market. Here's the 240s. You got some support short term around 49.77, but let's just look at the weekly. All right, we talked about wishful thinking, big time targets above 54.20 that hasn't been met yet. We're still kind of above it. Daily for highs, below weekly for highs. So again, we're kind of in no man's land up in here and above that 48 area. We got a big range here. I hate to say over and over again, it might be time just to sit tight here. I don't see a lot of leverage yet. If we get up into 54.20, I do see some shorting opportunities on May crude. Let's take a look at the XLF. Here we go. You guys know, if you've been watching the show, I hate, my feelings on this. Think we should be heading a lot lower. We finally did break down below this 24.36 area, but what do you do now? We're kind of, most recent profiles have a prevalence on what's going on in the current range. So right now, we're sitting below some former support on this particular instrument. And I think we can head back down to 23.12 easily. So make sure you put your stops in. Those stops probably need to be oriented above 24.10 on the XLF. We'll see what healthcare did. We were actually looking at this the other day, coming down into those weekly unfair highs, 72.70. That didn't really hold. It's a little bit too much pain for me. My appetite for risk and noise level is a little bit lower than that. But we did get down into the DMZ between the weekly unfair highs and the daily unfair lows. And if you're still long, you might have a chance for this to rally. Remember, the stock market itself is looking a little heavy. That may drag everything down, so pay attention to that. We'll be right back with some individual stock plays in just a second.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were kind of going through some of the usual suspects, trying to give some levels, some individual inflection points that might be appropriate for you to pay attention to. We didn't cover the bonds and the notes as much as I wanted to. I want to go back into that. And as we look at these, this is the 10-year. It's a June contract. You might look at this and say, hey, we're just kind of cruising back up into the weekly weekly balanced area, if you will. And, what does that mean? How do I glean any information off of that? I see this as kind of a pullback into support for this to possibly move higher. And, I'm basing that kind of looking at the navigator down here. It's been kind of getting green again, getting above zero, new profile, edging a little bit higher, providing some new support. I don't mind taking a shot on something like this at this stage. So that's kind of the take on the 10-year. I had some emails about that actually right in the middle of our break here. Also wanted to comment a little bit more on UNC's loss. God, it's tough to watch. I know Jay's been commenting about that, but I grew up in the Tobacco Road when David Thompson and Tommy Burleson and the rest of them were at NC State, winning in '74 when they beat Bill Walton and the UNC or UCLA Bruins. And I went to basketball camp. Phil Ford was there, and it was just I just got extremely addicted to basketball and college basketball and ACC basketball. So it's near and dear to my heart. And hate to see Carolina lose right now. I know, exactly. I could name every starting player on every ACC team from probably 1972 to 82. And when I got to NC State, Valvano won the championship. So it's kind of different times. And if you've never watched that 30 for 30 on NC State and Valvano, it'll make you cry. It's a very, very nice segment they did on ESPN about that. All right, let's take a look at a couple of stocks in play. We were trying to figure out, what are the stocks not cooperating, and we were going into the scanner and trying to find leverage points and inflection points to pay attention to when the market was going straight up. I've got the S&P 500 out here in the grid, and in the spirit of what we were talking about before, I just want to kind of review some things. Daily, below the box. We always choose below the box. I'm always trying to figure out stocks that are not cooperating with the market going up. But you've got some other options here. You can find stocks that are literally sitting on the cliff on the weeklies, dailies. I can go in here and I can choose bottom, figure out stocks that are just sitting on the precipice of getting crushed. To not be able. Good Lord, that's pretty scary, actually. So as I look at this, I was genuinely interested in trying to find stocks that are trading below profiles, but the amount of stocks that are sitting on the fence here, and if these start giving it up, this is a non-weighted fashion on this breadth here, this thing could get really, really out of whack. So as I look at this, I'm just doing some quick kind of views here. I'm looking at Netflix, bottom of the box weekly, bottom of the box daily. Let's just take a quick look at this. And this is one of the household names, basically. Monty Tao, yeah. Mark Moeller. Do you remember that name? That was kind of a six man on the NC State back in '74. But yeah, I went to basketball camp and played a pickup game with Phil Ford. Now when I went to school at Hunt High School in Wilson, I actually played against who's the guy who's really famous? Went to Carolina, number 23. Yeah, had to play against him, and that was his senior year. He actually grew about 6 inches from his junior year to senior year, and it was kind of the Michael Jordan show. I was a sophomore then. Anyway, here's Netflix. So we're sitting at the bottom of the box on the dailies, and we're sitting on the bottom of the box on the weeklies. And this is the type of stock. We're going to be right back. We're going to discuss this a little bit further.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were looking at Netflix. Excuse me. Looking at Netflix and taking a look at, this was sitting at weekly unfurloughs and daily unfurloughs, and this scanner picked this out. And, I know a lot of you out there going, so what? What do we do now? I'm looking at this, especially looking at the reversal here, and also trying to combine, is the market going to give me any help right now? I don't think so. So I'm not a big fan of buying Netflix down here on a multiple time frame confluence of weekly unfurloughs and daily unfurloughs. That's just, I'm kind of, put maybe 3 and 3 together here and trying to figure out if this is the time to step in and start buying things on an individual basis. I mean, what's that saying that, just going to wait till there's blood in the streets? There's I wouldn't call this blood in the streets, just coming off all-time highs. But, it's something I think you can stand to just sit tight a little bit on. And to be honest with you, if Netflix gets below those two areas, it's probably going to have a flush, and you're more than likely going to have some shorting opportunities. Let's take a look at Pinnacle West Capital Group. And I'm going to just pull this up in 2 seconds. We're also going to take a look at Walmart. Here's the daily on Pinnacle West. Here's the weekly. Again, this is one of those things that it almost looks more like it's consolidating, kind of didn't want to be there, got up, and then back down. And I know you don't want to hear my artistic view of what's going on, like didn't want to be there, went up, went back down. But right now, again, I don't think you're going to have a lot of market help. And I'm actually looking at some of these, even though they pulled back off of all-time highs, that things on their lows go lower. This may actually provide some more downside movement on Pinnacle West. Let's take a look at Walmart. Okay. This is one that, I've been looking at below, and we've been talking about this below this. Let's see if I can get my slit over here. All right, there we go. Here we go. We talked about looking at this from the short side a couple of weeks ago, putting stops above 83.48 based on your appetite for risk. I still love this trade, and I love it how we've kind of gone back up into that daily unfair low to kind of get some more leverage to trade down. This is a stock I'm trying to stay with, stops above 84 in Walmart's case, and I think we could drift a lot lower. Okay, that's kind of the low volatility pick of the month here. Let's take a look at Weyerhaeuser, WY. All right, we're just trying to find things that are giving it up right now. I love this. Love it. Stops above 34.08 and just let this thing fall apart. This is one, I think you've got about another $2 in this one on the downside. But remember to put your stops in. If it doesn't work out, it doesn't work out. The risk reward scenario is what we're always looking for. Short-term stingy numbers are more than likely going to be above 33.25. Long-term stingy numbers above 34.08 on Weyerhaeuser. Going down the list, I see some things that we've been paying attention to, the staples of the world. These are, PepsiCo. Let's do this. Let's go in here and kind of get a different sort here. I was doing that for another reason. Here we go. Let's take a look at this, and let's take a look at that, and okay. Now we're looking at weekly below, daily below, and we can also see those inflection points as they're happening in real time. Diamond offshore, we've talked about staying away from that. Why have we talked about staying away from that? That's why. Hasn't been the darling of the XLE world, put it that way. We're also taking a look at Hewlett-Packard. Let's look at HPQ really quick. These are extremely non-cooperative stocks here. Here we go. This thing kind of showed its hand below 37, but let's take a look at the dailies, because here we go. And there's that 37 up there, but we've looked at this, we've talked about this over the last couple of weeks, and we talked about trying to find inflection points to pay attention to short this thing. 33.30 was the last one. Now we've got 32.11. I'm still loving this from the short side. Trading 32 pre-market. Yeah, I mean, look at it this way. Think about if you're long this stock. You got to be terrified, and that means there's some more blood. More than likely, it's going to happen, because I don't think it's flushed everybody out. That's the situation on HPQ. As we come down into the rest of the pack, let's take a look at Intel. Get a lot of emails on this, not from traders, from people who are just, the dividend type kids that are asking questions about this thing. This has really, on a relative strength standpoint, just has been, can I say the word crap? I think I can. Has been crap since we started looking at, the S&P's consolidated to move higher. Well, this thing's actually showed its hand early. Now you've got, in my opinion, zero reasons to buy this. You've had zero reasons to buy it as soon as we crossed the border on the 3327 area. But, now, is this thing on sale? Here's the weekly. If you're going to tie up your brain cells to try to find things to buy, you more than likely can opt out on this one. There's not a lot to grab onto down here. And Intel, this is a 240. We talk about the regulation of the trade down. This is a great example of why not to buy Intel and why you shouldn't have bought Intel. And it's still not an attractive opportunity. So this is one to, if you're in it as a long-term investor, I don't know if you can't save some bucks by getting out of it now still and getting back into it later. All right, let's take a look at something else that's been on my radar screen. Procter & Gamble PG. This is a wicked specialist on the floor. If you've ever, back in the day, trading against this guy, this guy will do anything. Anyway, here we go. 82.64 below the box on the weeklies. 82.04, and here we go. Did this show its hand early? Yes, we talked about this before. We talked about the 84.48, 84.50 area, and made some good points on that. Got a little scared up there. Now we're back down below profiles. A weak stock and a somewhat of a weak market. I don't think this is time to think this is on sale either. This is somewhat of a situation where if you're going to try to buy this, you got to just sit tight. I don't think you got a lot of leverage on this one. Okay. Let's take a look at a couple other things on the radar screen. This is a stock that I just don't understand. FOSL. Let's just pull this up. This is showing absolutely extreme weakness right now. Every time frame. Here we go. Here's a weekly. This is one I think you just kind of put the shorts on, put the stops initially above 82. Go to Alaska, hunt caribou, come back and check it later. I don't think this stock's got a chance in hell. And I hate to be so deliberate about this one, but this is the one that, again, it'll probably reverse as soon as I say all this, but this is the one that showed its hand early. There's not a lot of interest in this. Technically speaking, it's the writing's on the wall. Here we go. All right. We're going to take a look at Mattel. It's not on our scanner right now, but I want to take a look at this and see how this has reacted within the bloodbath. Just as expected. Here we go. All right. We talked about this one, the close below on the weekly, to go back and retest on the 26.15. This is just, again, very similar to Fossil. Just the, things on the lows go lower. The stock's not on sale. Let somebody else figure out where the bottom is. Here's the daily. Mattel has been the gift that keeps on giving. It's been very similar to the euro. It just hasn't given you a lot of reasons to get long. In fact, Mattel's giving you more reasons to get long than the euro, but this is the thing that there is no end in sight in this particular stock. Don't be a hero on that one. Let's take a look at Amazon, some news out on Amazon. 367.79 pre-market. Here's the situation on the daily. We've kind of gone back up and ramped up into these unfair lows twice, which has been great. That means we kind of put a stake in the ground there. And what's the targets down below? The targets down below are 358. We're trading 368.7 right now. Make sure you put your trailing stops in on this one. This is one Dun & Bradstreet, DNB. I used to hate it when these guys called. They're relentless. If you ever own a business, you know exactly what I'm talking about. Dun & Bradstreet. They will call you till the cows come home. Here we go. Close below 127.91. All right. What do you do with this now? it's not on sale. You have nothing to pay attention to. I think we can drift lower with this. And where's the targets down below? Initial targets are going to be 122.50 down in there. Make sure you put your trailing stops in on that one, though. Here we go. All right, let's try to find some stocks that are hanging in there relative profiles. Let's go in the above the box land as this pops up. Oh, wow. Not that many for a change. Incredible. Valero, nice stock we've been looking at, talking about. Let's take a look at VLO. As we look at this, talked about the unfair highs the other day, 62.91. What do you do with it now? Probably stay away from this right now. We kind of had a good run, and S&Ps may drag this down. I'm looking for the S&Ps to drift a little bit lower right now. I know that has nothing to do with oil stocks in general, but as we look at oil, we're going to re-look at oil before we go to break here. We're just kind of going to drift around here a little bit, in my opinion, and we could come back and retest 48.03. The top of this range is 54 and some change, but we're just kind of bouncing around $50. I mean, there's not a lot of direction in oil right now, and it's kind of a day trader's situation. I don't have a lot of leverage to talk about on oil one way or the other. We talked a lot about oil, creating a bounce at some point, and a lot of negative connotations to oil in general. That's happened, and I'd love to see this thing consolidate about around the 50 area. That would mean to me that we could go up into that 54 and some change area. And obviously that would affect Valero, but I think you just got to get some direction on crude oil first. Here we go. Red Hat, based out of Raleigh, North Carolina, RHT. Let's take a look at that one. They moved their headquarters there. I know they originally weren't there. All right, here we go, $75. A Linux formatted consolidated Unix system. If you guys don't know what that means, look it up. It's a standardized Unix product. A lot of people use. I've used it. Here we go. What do we do with this? You can't do anything. There's nothing to hang on to up there. So if you've been long Linux, God bless you. Why would you have been long? We were compressing up into these highs for a long time, but who knew that, a news announcement would come out like that. So anyway, here we go. PSX, we've been talking about PSX, Phillips 66 for a while. Let's take a look at GILD. This one's starting to get ramped up again. If I can spell GILD. There we go. Here's the weekly. Feels like this one's getting ready to compress, and possibly be on the launching pad to move higher. Stops below 97.40 on this one. And I think you got a lot of juice left in Gilead on the way up. But put your stops in, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Wanted to take a look at Facebook, a couple of the other stocks that seemingly every person in the U.S. has in their holdings. Talked about waiting patiently until we had some new information on Facebook. Can't buy it up there. That's around 86 when we talked about that. And 81.71 is going to be the kind of the buy support area on this one. Stops down below. That's the good news, is you can always put stops around some of these inflection points, pick it back up later. My mom, who's she's 88 years old now. She was talking about Facebook. She goes, "Why wouldn't you buy that stock? Everybody uses it." Yeah, we can talk for a couple of weeks about that. But anyway, here's Apple. We talked about 122.42. We let's see where we hit yesterday. 122.60. All right, so that's pretty daggone close on Apple. Why did we talk about that level? We talked about waiting patiently until we could pick some up down there. It's a trader's bounce. God knows what the market's going to do to drag this thing up or down, but there's that 122.24, 122.42 weeklies and dailies combining there. So, has provided a little bit of a bounce. Remains to be seen if that's going to have any follow through. But again, the good news is stops below 122.42.24 at DMC. We gotta go reference something really quick here. The soybean trade. Still looking for this to hit lows again, 99.42 and a half on November beans. I think we're just going to drift and compress down into that area. Trading about 10 points higher. Had a couple of emails about that one. All right. Pick back up here some outstanding, some farmers. You're like a farmer, outstanding in your field. You guys can send me hate mail after this show if you'd like. That's okay. General Mills, GIS. Here we go. All right. It's been a kind of a, this is obviously not the internet stock du jour lately. But I liked it when we came down into 51.63, and I still like it actually. Why? Because we're compressing again above daily unfair highs. I think this is a decent trade for some people that are faint of heart, possibly even, or however you want to categorize. This is the boring trade of all times, but I love boring. 53.49 stops down below. I think General Mills can head higher. Stressless trading. Put the stops in. Play the profiles. Here we go. Couple of other fields in here. BXP, looking very strong. These are weekly and daily numbers. Starwood Hotels, HOT. Let's take a look at that one before we end the show. Again, I like it. It's been strong on the weekly, strong on the daily. I think it's still got some legs up. Stops below 82.66 on this one. Guys, you've been great. Steve Rhodes is next. It's Friday night here in Asia. I'll see you guys Monday morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.